Pete, welcome back. It's a momentous time in many people's homes. They've probably spent the last week or so dealing with nothing but US elections. Not the only thing happening around the world, of course, but it has been the centre of a lot of people's attention. Media's called it. Actually hasn't been called yet, but the media's called it. Views?
Well, good morning. Well, yes, President Biden or President-elect Biden is as far as he's concerned, and Kamala Harris, they're in the White House. And it's onward and upward from here. So it's going to be an interesting couple of months. From an observer standing here in Australia and looking in, I probably think the first thing is Trump and whether he goes peacefully and, there's the door and see you later, or fights it and litigiously in the courts and then the Supreme Court. So I think the jury's out as far as where it moves forward, but I'm sure that if President Trump stays true to form, it could be a rocky road ahead.
Mate, look, markets are reacting, and so what are we seeing is a market reaction as a result of the result or the lack of result that we've seen, the positioning of potential Biden in the White House. How's the market reacted to that? What are we seeing around Asia today?
Well, if we go back to Friday night, what we saw as far as US was flat. So that's NASDAQ, S&P and Dow. Nothing there, though crude was spanked down 4%. In Asia trade this morning, it's been a nice uplift across New Zealand and Australia. Let's see what happens as far as Japan at 30-year highs, and moving forward, how the rest of the day plays out once India comes online, Middle East, Europe, and then, of course, the big kahuna running into Wall Street tonight.
Currencies and stocks, that's really what we're talking about. We're talking about volatility, and we're talking a little bit about gold this morning. What happened in open trade?
Up about $7 or $8 already this morning, which is, considering over the last 2 weeks, it's gone from that 1900 handle nearly at 1960 now. So that's fairly, bullishly bid up. Crude, US dollar index has been spanked down, 92.2, 92.3, and everyone's saying, does it hit the 91s this week? That US dollar index, which is very heavily weighted as far into the euro, about 65%. So I think there's going to be continued volatility, probably, and when you think about it, the Aussie might have a continued uplift running into the end of November, so it's going to be a good time to be trading.
Good time to be trading, a little bit more volatility, a little bit more stability perhaps, who knows? Everyone's still trying to call that, and perhaps it's too soon to call. We saw last week in Australia, the Reserve Bank announced a fairly significant stimulus into the country and commit to effectively a 3-year fix on rate. How's that played out? What are we seeing? It's a low rate. There's still a margin there for the country, but then what? Bond buying. That's really where it's at.
Well, it is bond buying, and I think all the central banks will. When you get to nearly zero, do you either enter negative territory or do you go bond buying? And there aren't too many levers that any bank or central bank can pull, and that obviously is going to be the path forward. Well, what will be interesting this week is the RBNZ, see where they play.
We'll come to that in a minute, but let's talk stocks and let's talk the dollar. Yes. We're talking a bit about moving the conversation forward. We've been highly focused on this vote count. Everyone's over that now. Most of those numbers have come in, and the only thing really outstanding is whether it blows up in legal or doesn't. But if we look at the US election numbers here, we look at the dollar and we look at the stocks. We talk a bit about the liquidity pumped in by the Fed. There's probably some examples here that we can sort of extrapolate on and bring home.
Well, absolutely, and it's been very, very strongly bid up. If you're looking at that as far as the S&P 500 over the last matter of 2 or 3 weeks. So that's probably going to continue, I'd say, a little bit further upside, and too early to call where we possibly are as far as this time in November. Are we at year-time highs, or is there further upside there? We're nearly at the end of the earnings season. US dollar index coming under that 92 if that continues. That could be the start of it all to really continue. When you have elections, Will, normally you do get that sugar hit for the first 3 to 6 months. This time round's a little different. First off, it could be contested. Secondly, we had 133,000 new COVID cases on Friday, followed by 126,000 on Saturday in the US. France is 80,000, or nearly, I think I made a note, 87,000. They're just harrowing numbers. So what does that do to as far as demand destruction, GDP growth for this fourth quarter, leading into Christmas sales? This is not a domestic situation. This is a global situation. So I'm not sure how you go as far as growth leading into 2021.
I think the clear thing here is the signals won't be the signals until they are the signals, will they?
True.
I think what we're saying really is that the world has changed. There are no clear signals, and you really do have to wait for the evidence to flow through to actually record on the scoreboard.
Yep, very true. And the other side, that creates, I think, that volatility and that opportunity for traders. It's not uncommon that, you can be trading. You could be in currencies this afternoon, you might be in precious metals tomorrow, equities the next day. I think you've just got to be across all the different markets to see where the opportunity is. And that's becoming very, very evident as each day wears on.
All right, so to summarise that, the world's in lockdown still. We've got countries, well, certainly in Australia, we're coming out of it to an extent, we're relaxing a little, we've seen our numbers drop. In Europe, we're actually coming back out of the relaxed state. We were all been on a summer holiday lockdowns. And we're going into massive lockdowns across multiple territories. In the US, they're probably yet to go into a true lockdown. I mean, I had a story over the weekend where a guy decided to take a quick holiday out to the coast. The only reason he went home, mate, was there was a fire.
Yeah.
So there was no real lockdown going on there. They were flying interstate, moving to the coastal areas, and look, only left because there was actually a fire.
Sure.
So I think we're yet to see true lockdown. I mean, in some big cities over in the US, we've seen the people fleeing, effectively from the cities to find effectively safer environments to reside. But I guess that's where it's at. So election result, yep, the European issue, the stimulus is still in markets. Is there a sense of loose money floating around? Is there too much stimulus? Has there not been enough? What will happen?
It could well be that there's not enough. And quite simply, where are we in February and March and April? So this is where it could be a little bit of a deadlock between Congress, the Senate, Republicans / the Democrats. Who's going to make those decisions, and will it be left to the Fed as far as stimulus to, kick that big can right down the road?
All right, let's talk bond markets, because bond markets are clearly back in vogue.
Yep.
Here in Australia, there's a 5-day buying market. The federal government sells bonds on a couple of days a week, and the states are actually able to position bonds. There's I think the number's close to 100 billion, which is significant.
It is a significant number, certainly for us.
That, for our country, perhaps that is enough to get going.
Sure, it could be. I mean, we're fortunate, though. I'm thinking, well, how long is it till we actually open our borders to allow people to come in? And you just, with the current conditions out there on Main Street, you'd be thinking to yourself, you just couldn't open the doors to anyone from Europe or probably Asia. And how long's this run for? Is it for months or is it for years? So that's, I think, the uncertainty as far as where Fed banks play and our RBA. So, yeah, 21's going to be a really interesting year. This will be incredible data to look at in 10 years' time when the historians look at, what they could have done better or what they could have done worse. This is an incredible case study.
If we take a quick look at this, yep, certainly the bond market says less stimulus is coming. Obviously, the blue line here is the US Treasury 10-year numbers. Looking at the yield there, the yellow, there's the NASDAQ composite. Pete,
Yep.
What do you draw from that?
Well, when you see the composite, that's been incredibly well bid up. That whole tech sector, it's just, off to the races. And though there are a number of tech stocks that have performed incredibly well since March, we all know that, the likes of Amazon and Alphabet and the Facebooks and so on.
I mean,
Yep.
some of these products are just driving more debt into the market too.
Of course. And then there's other participants that haven't performed anywhere near as strongly, but because of their weighting, there's so much weight to these big stocks that they've carried the market forward. So will that continue? One thing for sure is we may not see with the Biden presidency the dismantling of the tech sector that Wall Street feared. So that could be a good thing for that industry. And if you're looking at the bond market, well, I think it's just going to be further adjustments from all the central bankers globally. We're still not out of the Brexit fears. We're not out of the ECB worrying where they play over this, November, December, January period. So I think it's going to be a time to reflect and certainly look for opportunity.
Pete, we spoke earlier in the current conversation a little about New Zealand, and
Sure.
We've got a chart up here that sort of suggests that there's a bit happening down there, and what is it really telling you?
Well, when you're looking at that New Zealand market, are we going to enter that negative territory? And what happens as far as their stimulus? They're further along the curve than what Australia is as far as lockdowns, and they've really come out the other side. So I think it's just, reflect, Let's see what the mood is from the central bank and how they stimulate their economy. Is there going to be hardships moving forward? Supply chains are an export-driven economy like ourselves, and they really, they need tourism as well as we need tourism. So how does that play, and what does the government need to do to actually stimulate and get growth?
One of my pet subjects, Pete's the America's Cup, and that's coming up next year. So it could be the event that puts the little country of New Zealand back on the map.
Well, it could be. Well, they'll have to do better than what they did on Saturday night in the rugby. They got done there, they got dusted, and Australia stands proud on that one. So we got a win for a change. But yes,
unusual but good.
Unusual but good. But yes, well, that'll be interesting if the America's Cup is actually.
If they operate and run the event,
exactly. The tournament has played out. So
if you go back to the late 70s, early 80s, it was the event that put Australia on the map, and arguably triggered significant foreign investment into this country to drag it out of a pretty negative territory.
You bet. And we did very well. If you put your mind back to Alan Bond and John Bertrand and who was the Ben Lexon. The designer, fantastic.
The wing. Now look, back in Europe, look again. We spoke about Europe locking down. We're thinking perhaps that some of those US states might follow, given that there's 250,000 odd new cases over the last 3 or 4 days.
Yes. The last 2 days.
Yeah, and so here we are looking at a pretty consistent uptick.
Well, it has been. It's been incredibly. When you're looking at the growth, really from that end of September, early October, it's just. No one could have thought that this would have entered that sort of number. And when you're seeing what France is at, 87,000, you're approaching that infection per million residents. It's really climbing quite incredibly. So, I don't like where the future takes us to on that one.
No. Mate, as we have a quick look here, we won't hang long. We're talking about the pound versus the US dollar here. It's a 4-hour chart. We can sort of see that there's been a bit of activity, and now it's sort of flattened out.
Yeah. Look, we've got to worry about 2 things there. You've got to worry about that continued weakness as far as US dollar and the ongoing saga with Boris and Brexit. So it's hard to determine which way we're going to play. We're moving closer to the Brexit deadline, and we've got that other, hand grenade in there, which is US dollar. So. All I know is that I think the volatility and those large swings are going to remain, and whipsaws across, a lot of these currency markets.
I think we've got one more chart here, which will just talk daily performance, really, of a bunch of the different currencies that we look at on a week-to-week basis. I mean, you've got the Europe and the pound there, right at the top there, and we've got the pretty big time in the red. We've got the crude oil play. Yeah. We haven't spoken about oil in the last few weeks, but what's going to happen there? What are we thinking? Will it play a role in this reconnect?
Well, 3 or 4 quick points. First off, you've got the demand destruction with 87,000 in France. The other numbers rolling across all of Europe. So more people in lockdown, less people driving, which means demand destruction. Secondly, the same thing in the US. If Biden comes and he says, well, we're going to lock this down, where on earth do you start across a nation with 331 million people? That's no normal, it's just not a flick of a pen, we're going to stop everything today. So that really creates, I think, a very much a turning point for crude. Crude's been when you're looking at the volatility, really from about the 22nd, 23rd of October, it's been massively bought up, then hit very hard, spanked down, then came back up, and now it's been spanked down again, all within 2.5 weeks. Very, very volatile. And it's in Asia trade today, it's actually up 1.5%. So after that 4.5% move to the downside on Friday night, Saturday morning here. So you've just got to that's a market to look at, trade, and don't marry it, because it's very, very volatile. Little fish is sweet, and many traders look at that barometer as far as crude, telling them what to expect on other markets. You look at copper, and Dr. Copper's always been one to think, yes, it's a good one to look at from a barometer. But I think the real heartbeat is certainly WTI or Brent crude oil.
Mate, so if we wrap up very quickly, we've had a knife edge election that's not yet decided, but looks like it's going in a direction in towards Biden.
Yep.
We've got probably a fair statement would be that a split Congress may not be a bad thing for markets, because it may actually retain the volatility that traders like.
Yep.
And if we look really that's slightly one step further forward, you've got the dollar perhaps on slightly steadier footing.
Could be. I'm not going to say it's going to be steadier. It could go in that 91, if not 90s, as far as that downdraft for US dollar index. I'm not forecasting that, but if you look over the last couple of weeks, what we've seen, it's been one-way traffic, and maybe it's going to continue to soften. Dollar sell, gold's up, and hold on to your hats, guys, because it's a long way from Christmas.
Last point. The Reserve Bank of Australia and the British Treasury seem to be in lockstep, both buying bonds. So, you know, we've got two players there, new at the game, perhaps, well, not new at the game, but coming into the game late. Have taken a serious look at the market, actually watched what the market did and the various signals that they kicked off. I think they've taken a very educated view on where they go next.
Sure, and I think that will continue, maybe not next month, but certainly January, February, there could be more bond buying, certainly for UK. And all the currencies, I think, are going to be either beneficiaries or hit from that strategy. And 2021 looks like it's going to be a very, very interesting year for trade as well.
Pete, it's a great pleasure to have you here. And, mate, we look forward to chatting with you next week, and we'll see how this week unfolds.
Thank you, Will.